Hello and good afternoon. This is Larry Tentarelli with today's edition of Your Daily 5 for StockCharts.com. So we'll get started today and we're going to take a look at 5 charts of interest that are very high on my screen. And before we go into the charts, I'll just introduce myself. I am the editor and publisher of the Blue Chip Daily Trend Report. I've been a frequent contributor to Your Daily 5, and you can find me at my website, bluechipdaily.com. On Twitter, you can find me at LMT978. So we'll get started with 5 charts, and I'm going to get started with the big one first. So I'm going to start with QQQ, which is the NASDAQ 100 index, which is very heavy in tech. So a lot of cross currents that are going on right now. And I brought up actually a weekly chart. So QQQ right now, I am heavily underweight in technology. I've been heavily underweight in technology for the past few weeks now. Now that could change at any time, but I'll go over what I see on the chart and also what I think could be potential upside catalysts. So right now, QQQ, for my time frame, is in a near-term downtrend. So there's a couple signs of weakness. The first thing, obviously, is the successively lower highs and lower lows. So we're taking a look on the weekly chart, and we can see the NASDAQ 100 started to roll over. QQQ broke down below the 40-week moving average. But just a series right now of lower highs, as we can see on the chart, and then lower lows. Also some weakness in that it continues to make lower weekly closing lows. So it lost the 40-week, had a 2-week bounce, but then lower, 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 and lower. Also, it's got a bearish 10-week, 40-week cross to the downside. So with all of this being said, this just indicates for now that the near-term trend and the near-term momentum is weaker and down. Now, with that being said, 300 to 320, we're starting to get into a key support level, and this goes back to the end of 2020 and into the beginning of 2021. So near-term downside momentum holding over support at 300 to 320. Now, a couple of things quickly that I think could be catalysts, and then we'll go into the other charts. So obviously there's a war that's underway. It's a very unfortunate situation. Now, obviously, an end to the war or major positive news as far as a ceasefire, that could be a major upside catalyst. Also, commodities have been very strong. We're going to take a look at those in a few minutes. If commodities were to have a very, very sharp pullback, I think that would benefit QQQ. And then finally, if we get some type of a surprise, so the FOMC is going to put out their statement on Wednesday. They're expected to hike interest rates by 25 basis points. If for some reason there was a positive surprise from the FOMC, whether it was commentary, action as far as how often they're going to hike, any positive major news from the FOMC, I think could be a major catalyst to the upside. But for my time frame, the very minimum that I'm going to want to see for me to get more constructive on QQQ is I'm going to want to see a close over 350. So if QQQ can close over 350, that's maybe 8% from here. If it can close over 350, that would be a higher high here and also clear the declining 10-week moving average. So I'm cautious for now. I'm underweight, but I am staying open-minded to what could be a possible upside catalyst. So we're going to take a look at a few other charts, and we're going to venture into quite a few different S&P sectors. So Bristol Meyers is one of my favorite lower volatility charts. So we can see nice uptrend. It's over 1, 2, 3, 4 rising moving averages. It's been holding this rising 50-day moving average going all the way back to December. And with the markets down year to date, so the S&P is down double digits coming into this morning. QQQ is down more. But year to date, we can see that Bristol Meyers has been very steady. It just cleared a recent resistance level just over 68.50. It's got a lower valuation. It's got a high dividend yield. And these two factors, the market is really focusing on those. So that's trending higher. We'll take a look at Berkshire Hathaway. So Berkshire Hathaway is in the financial sector, but they also are really an industrial conglomerate. Off the top of my head, Berkshire is a holding company for about 60 different companies. So they're in industrials, they're in the brick business, they're in the energy business. They've got a lot of diversified industries, but the chart itself set up very well, trending higher. Now we can see this is going to be the opposite of triple Q. So Berkshire, for the most part, continues to make higher highs. So 1, 2, 3, 4, 5. Couple little pullbacks along the way, but the overall trend is for higher highs. If we look on the downside, for the most part, higher low, higher low, higher low. 4 rising moving averages, and really holding up well. Even recently, last week, the bank stocks pulled back when bond yields pulled back, and Berkshire in the financial sector made a new high on Friday. It's holding over a constructive support range, and I think Berkshire set up very well in a variety of different market situations. So that is chart number 3. Now we're going to move into the commodity sector, and I'm going to spend some time here. First, we're going to start with Nutrien. So Nutrien is in the materials sector. They're the largest producer of, or the largest publicly traded producer of potash and fertilizer in the world, $54 billion market cap. So we can see with Nutrien, it just had a pretty big breakout. Now the war really started to pick up on February 24th, and we can see Nutrien has had a pretty strong breakout since then. But even going into that, Nutrien for the most part was trending higher, rising moving averages. So I've got a position in Nutrien that I started last week. Now here's what I will say. This chart is obviously going to be a little bit more volatile than, let's say, the Berkshire chart or the Bristol chart. So this chart could be a little bit more volatile, especially based on the news that we get from overseas. So what I've seen is whenever there's any positive news from overseas, these regarding the war, the commodity stocks tend to pull back. So we're seeing some of that this morning. We can see Nutrien's down about 3%. But as long as the news stays the same overseas, then I think that these commodity stocks are going to continue to find buying support. So we can see last week, Nutrien had a big breakout to 102. It pulled back sharply to 88 and change. And then right after that, it made new highs. So this one could be a little bit more volatile. I looked at it on a pullback, and pullbacks could happen at any time. But overall, the longer term trend is higher here. And I think that the spike that we're seeing in the commodities prices right now, even if we get great news on the war, and obviously that's, that would be the #1 priority, but even if we get some type of resolution overseas, I don't know that these commodity supply disruptions can be fixed overnight. So Nutrien, one of my favorite longer term ideas, but it could be volatile and choppy in the near term. And then we'll take a look at Valero Energy. So this is chart number 5, and we're going to move into the energy sector. Now, crude oil recently broke out, obviously with what's happening overseas, but the crude oil sector, crude itself, the ETFs, XLE and XOP, they actually started to turn up back in 2020. So the energy sector, it was the leading S&P sector in 2021. It's the leading S&P sector so far in 2022. And what I find interesting about the Valero chart is a couple things. So if we take a look at the chart, it had a big move higher recently with the crude oil complex, and then it pulled back sharply based on where Valero, on some of their supply channels. But we can see it held right at the 50-day moving average, had a nice move higher, and right where Valero is here, so 89 and change, very close to a breakout level. So for those that look for breakouts, a move over 94 in Valero could signal a sharper move higher. $80 is support in the near term. But as I look through these energy charts, energy is still my top ranked sector. Now, obviously, it can be volatile, but once again, the same thing that I think for commodities overall applies to energy. Some of these supply disruptions, they won't be able to get those fixed overnight. So obviously, the commodities group could be more volatile, but in this energy sector, Valero, especially as long as it holds over 80, I think that it's set up nicely, and a breakout over 94 could lead to higher. So that's it for today's video. 5 charts on the top of my screen. I hope that you enjoyed the video, and I hope that you have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.